Basic market structure when you're day trading will give you the ability to actually predict where the market will go next. So this is for people that are in the beginner stages or the intermediate stages that are trying to become that advanced trader that can actually trade for a living, trade for their main source of income, trade to make a bunch of money. And on top of that, be able to make as much money as you realistically want while making it look as simple as possible. This is really how you make the markets look simple. So first things first, we have to keep things simple when it comes to actual day trading, when it comes to market context and etc. The markets can only do two things, which are the following. The first thing is it can usually typically only go on an uptrend, which I'm going to show you what this looks like, but higher highs and higher lows. And it could do the other thing, which is going on a downtrend, which is lower lows and lower highs. And so what that basically looks like is the following. It's essentially this. We can picture this as our market when it comes to day trading. Let's just say we're day trading the S&P 500, which is called SPY. So this is going to be representation of a candle here. So this is the low of the candle, and this is the high of the candle. So visually, as even if you don't know anything about the market, you can say, hey, this is the low from a price perspective. This is the high from a price perspective. It went from here and it went up to there, and that's fine. And now next, what can the market do? Right? Keep in mind, it can only go either up or down, essentially. So after that, market context in this scenario, it just simply goes down, right? So it went from up here to down to this perspective. And so essentially what this now looks like is that we have a low, a high, and a higher low because this is a higher low than this low. So it went from boom, up, boom to down. And then continuing on, another thing that the market can do is it can go up higher, essentially. So now it went from low to higher low, up to a higher high now because this higher high is higher than this high. And so following that, if you keep kind of the trend going, if I'm looking at this from a market perspective, I basically have two questions to ask myself. Okay, if I wanted to potentially do a day trade, do I think that the market's going to go up or down long term? If I'm right about the direction, then I can make a whole bunch of money, right? And so if the pattern continues, right, low, high, then what do we think more than likely is going to happen next? Cool. It's going to give us a low. So it's going to do a little pullback, or what we call when it comes to day trading or any trading is it's called a dip. So it dips down to additionally another higher low because this is a higher low than the one higher low before this, which is higher than the low of all time, at least for this example, right? So we have high, low, higher high, and we have a dip for a higher low. So again, if we're thinking, you know what, I'm a trader, I want to be able to make money. What money goes to the upside when the market goes to the upside. So market context says I need to jump into a play when it goes upward. So with that being said, if the pattern continues, what's it going to do? It gives us a much higher high. So from a trading perspective, to make this more logical and bring it full circle, the trade in my POV is right here. This is one of the trades that you could have potentially done. You could do the trade when it comes down to here, right? But the safe, comfortable trade is the one up here where it goes from this higher low to this higher high because context gave us the insight to say that, hey, it's doing that up there. Now, the following question becomes, well, what about when things change? From a market context perspective, when and how can you exactly see that? So we can actually see that in real time here because the next candle that forms we go ahead and do both of them, excuse me. So it gives us a lower low or higher low, excuse me, and a lower high. So it pulled down and it pulled back up. But as you can see, this candle here with the lower high is actually lower than this higher high, which it kind of signifies the fact of saying, okay, that's interesting. So it went down, it went up, it didn't go higher than this. So it's almost like it's having issues breaking above it. From a market context perspective, is what that's visually showing. So maybe it's going to try to push downward. Okay, I'm going to wait for more market context so I can know if it really is going to do that or not. So the next thing, it gives a lower low. So you're like, okay, this is lower than this higher low. So because it went down, then it went up, then it went down, and now it goes to a lower high. Now we have all the information we realistically need to say, hey, we have a pattern now, right? We went from high to a lower high to a lower low to a higher, what is it? Yeah, lower high, excuse me. So now we should enter into what's called, as an example, an option put because we can make money when things go to the downside because we're correct from a directional perspective. As a result, boom, giant play where we actually got into hypothetically an option put. So we make money with it going downward, right? Then it goes back up to a lower high, and then boom, dramatic pullback again, potentially a second play for this piece over here for it to actually go down. And so this is how, again, when the market's going upward, you can make money. When the market's going downward, you can make money. When the market's going sideways, you can make money. Because realistically, FY, if you kind of look at it from this perspective over here where I'm circling, this is technically a sideways market, right? You can make a play with the call up here. You can make a play with the put up here. You can make a play with a small call up here, and you can make kind of a play, not really, but a little bit of a put down here. That's the sideways market. So this is the upward trend, right? The channel of that. The sideways piece is what I mentioned in the middle. And then also this is the downward piece. This is what you can kind of use what you call trend lines. Trend lines really show you from a basic perspective where exactly things are currently at. Is it currently in an uptrend? Should you only be looking for calls? And hey, once it's doing this, once it's doing this, right? It's going up, it's got an upward momentum. It didn't go up to hit this anymore. So you're thinking that's suspicious, right? You got to use this from a data perspective. It's sus that it's not going up there and breaking down. So, oh, look, it broke below our thing for the first time. Maybe things are potentially changing. This candle here is actually interesting. It's the first time it's broken below this area. And then it didn't even go back above it. Okay, hey, again, more information that we can use from a trend line perspective. We definitely should be hypothetically not thinking that things are going upward anymore. It looks like things are going downward now. But that's from a basic perspective what market context really looks like as a professional trader. Not a whole bunch of technical indicators, not any kind of news and junk like that, because a lot of that stuff, it's sometimes helpful, but it just shows the same thing. From a news perspective, that's not helpful. That's a different story. But from a technical indicator perspective, it all typically it really shows this, especially if you know anything about, which is not what this we're talking about here, but EMA crossovers, etc. All that's showing is that a trend is changing. So if you could visually just see low, high, higher low, higher low, etc., then that's all you need. You can have a cleaner chart. So let's look at a real example that's not so quote unquote perfect, right? Because this looks like, hey, if I could see that, I just jump in a trade. I'd just tell anyone to jump in a trade because I can make as much money as possible. But let's look at one that's not so quote unquote perfect. And that's why, little context, certain stocks slash ETFs, such as SPY, which is the S&P 500, which is what I trade, by the way. I do trade options on this. They trend like this on a regular basis, which is very interesting. So this is not really as uncommon as you would actually would think. So here's a real example.
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
This is the SPY chart that we talked about. This is specifically the 5-minute candles. So each candle here, one, is green here, there's red here, there's green here, et cetera, et cetera. They all represent 5 minutes, and this is the day that we're specifically looking at. This is 2 days literally after this. So this is literally the last day of trading specifically. And I just basically chose it. And just so happens that it happened all this day. So first things first, let's check this out. We have a high. So right, the market opens up on the left-hand side. We have currently a high over here. And then we have a low, right? So a little green candle in the middle of this. and we have a low. So it went up as a high, then it went low for a low. Perfectly fine. Looks very similar to, like I mentioned, the other stuff. Then after that, we have a higher high, right? So it went from up to up higher again at the moment. And then boom, if you're looking at the base of the candles, I'm not looking at the wicks, FY. The wicks can work, but the wicks sometimes give false information, which is sometimes called like a false breakout, so we're not going to cover that here. But looking at the body of the candles being the bottom of this little red candle here as an example, they have a higher low than this guy over here, essentially. So we have a high, a low, a higher high, and a higher low, right? So context would potentially say, hey, for one, just as an example, if we kind of look at this area, it came down, tapped this area, and kind of bounced upward. From a supply and demand perspective, which is the strategy I trade, it bounced upward. Maybe there's a play there. Boom, it actually worked. It goes upward, right? So that's another thing, just as an example. But then after that, we have something that's interesting, right? We had the higher low, but we have a lower high here. So it went from higher high, and a lower high, being that it said, hey, it cannot break above this area. So there is an issue with this specific spot. As a result, check out what happens. Boom. It gives the lower low because it showed proof and evidence that it tried to come up, fell down, tried to come up again, fell down, tried to come up over here, fell down, and it basically just broke below the bottom of the higher low and the low realistically, and came all the way down over here for that lower low. So it shows that new trend is following along with that piece. And we have a lower high. So it bounced here and then it bounced back up to this perspective. Then after that, fell down more drastically for a lower low. Then went up for a lower high. So you have a trend. And again, not even saying that, I'm not saying there's a trade here, not saying anything's here, but just as an example, right? If it went from lower high to lower low to lower high to lower low to lower high, where do you possibly think it's going to go next? If the trend is a real thing, whoa, it went lower, right? It's realistically not like that's not even looking at is there a trade there, because to me there's not, but depending on your strategy there may be, right? But that's not even that complicated, right? And that's if you got in somehow there realistically, right? Which is still late. By the time it broke below this, you probably knew it was going to keep kind of falling. And then after that, you could see, hey, nothing fell lower than the lower low. So it went higher. And then you're thinking, okay, wait a second. This is a higher high than the lower high over here. Clearly it broke the trend, which it did. Hence why we had a higher low here than the one previously. So it shows that the trend is changing, right? It went from lower low to higher high to a higher low because it finally pulled back, and it's going kind of upward now because this is a low and this is a high. And then it realistically didn't really do much. I didn't really count these because this is basically sideways, right? And this is literally sideways as well. So the next higher high was all the way over here. So from a trend perspective, it looks like this, right? It went on an upward trend perspective very, very slightly from this POV to a downward trend over here for this amount of time to a full uptrend over here at this point in time. So it changed the trend 3 different times throughout the day. There's option calls, there's option puts that you can potentially take throughout the day, but no matter how you look at it, it all came from a formation from the idea of saying the trend is going up higher, I should look for calls, or the trend's going lower at this perspective, I should only look for option puts, right? It's trading with the trend when it's easily possible. And again, if you're trying to do sideways market stuff, that's perfectly fine because this is that, right? So it's boom, getting a call to the upside, perfectly fine. And it's still, hey, if it's going up, it's better to take a call, right? Even if it looks like it's visually going sideways, it's still doing some kind of trend, no matter how you look at it. So that's the real example. And realistically, like when you look at this does look, of course, vastly different, but it doesn't realistically look too much different than this. This is just kind of flipped around a little bit to a certain degree, and they're just blue instead of the actual real colors over here. So with that said, I want to give you some stats here because I know you've heard the stat that 90% of day traders fail. Perfectly understandable. But a couple things on that. The 90% here. Majority of you listening to this video, will say, Maurice, it's not that easy. Don't lie to me. And I'll just say to you that you're the reason you're not successful because you keep thinking that there's this crazy, complicated, convoluted rationale to all this. And I'm just telling you, hey, if it's going up, you should, buy it, calls, and it'll go up. And you're like, no, no, it's not that easy. It's not that easy. I'm telling you, from a successful trader and from a person who has one-on-one coaching that has trained 1,000+ people to be successful, it's actually that easy. And that's not a plug for the coaching thing. We only accept 10 people per month at this point. We have it limited. But nevertheless, the 10% of people that will be successful is this. The successful minority will say, I want to believe in you, but let me test this myself first to see it with my own eyes. If you do and say that from that POV, then you will more than likely be successful because you didn't say like, oh, I believe you 100%, but you tested it yourself. And on that note, by the way, I know some people, last piece here, some people get worried and say, oh, if 90% of traders fail, that means that it's so hard and so difficult. That means most people just fail. Well, think about it. If you take 10 people in a room and you go tell all 10 people, including myself, go take this test to go become a doctor to do heart surgery. I'm not gonna lie to you, I might fail it. Actually, let me go ahead and tell you the truth. I'm 100% failing it. And you probably listening to this are going to fail it too. So unbelievably or not, I would believe 99.9% of people that go become even a generic general doctor fail. 90% of people that probably even go to try to become a nurse fail, if not even higher. 90% of people that go to college more than likely don't. I don't know that stat. I'll be very curious. But most people don't really pass college. They attempt, they try, the government gets their money, they spend a whole bunch of things, they get some cool experiences, but they fail. This is not a bad stat. If this is a good stat, this is a wonderful, great stat because most people in the world are not supposed to be rich. Most people in the world are supposed to be average. So if you're trying to not be average, then don't believe what I said in this entire video. Test it yourself and see it with your own eyes.